Hello everyone. So we have some flash services PMI data coming out tomorrow morning at 9:45 a.m. Aside from that, that's it for the week. There is no other news coming out for this week. So getting right into the video, yesterday I was showing up here that this setup that we had on the SPY was not bullish at all. I was expecting us to bounce off of either 395 or 392. That obviously didn't happen. We fell. We ended up bouncing off of 388. And then we rebounced up to around 390 intraday, and then we closed basically around 389. So moving forward, clearly this is still not a bullish setup, right? For it to become a bullish setup again, we would need a close back above 395.50. Now, the issue with being bullish right now or waiting for any sort of confirmation is there's no reason to really be bullish at the moment. Especially, here's one of the problems is we have large tech stocks like Apple and Google as well, both trading outside of the lower levels of the Bollinger Band. And generally, when we do start trading outside the lower level of the Bollinger Band after the first day, there is at least another day where we could continue falling lower. So it's a bit early to become extremely bullish. Probably a day or two early. All right, so tomorrow we could easily see even more downside, and then that's when I would want to look to buy dips on these tech stocks. Because when you look at the NASDAQ compared to the IWM, the NASDAQ is not as overextended in terms of the Bollinger Band, right? The QQQ, when you compare it to the IWM. But then there are stocks specifically in the NASDAQ, for example, Apple and Google, that would be good dip buying opportunities if the market ends up getting way too overextended here, right? If tomorrow we end up getting another big red day, getting dips in Apple and Google, in my opinion, would be very, very good. So yeah, there's that. There's my analysis for that. We could see that the dollar did well today. So the dollar did well. The market did not, right? The VIX also did well. We got to close back above the 20 exponential average. And then we take a look at bonds. Bonds did not get a close and a break back above the prior highs, but they still continue to make, the strength is continuing to still be there. So we're continuing on here. But yeah, aside from that, when just looking immediately at this chart on the SPY, this is not a bullish setup. This is the type of setup that, first of all, I mean, I don't think we're even going to gap up very heavily overnight. But this is the type of setup that we end up getting a gap above 392 or 391.50 and then just continue on from there, because this is not a good setup. Like, it would take some time for a setup to be made here. So most likely this sort of setup ends up turning into like a gap. But yeah, overall, so say for example we do end up breaking above 395.50. So this would be the first level of resistance that we need to break above, become bullish, right? And then obviously 400. But the higher we get up, it's just more and more unlikely that we do get. It's just such a long way to go, because when you take a look at it, fib standpoint, you need not only a break of 400, right? Obviously, but then you need a comfortable break above 403 and then 405. That is such a long way to go. But it's all possible. If we do first start showing some strength above 395, you can, have a stop loss above 391.50 or 392, any sort of level like that, and ride it upwards. Because if you do think that we are going to have like a Santa Claus rally and a rally into the end of the year, ideally, you either want to buy into strength or you want to buy into extreme weakness. Right now, we don't have extreme weakness, nor do we have strength. So, yeah, strength would be above 395. Extreme weakness would be another red day, like another very nice red day. Trading even further outside of the lower band of the Bollinger Band. So, yeah, there's my thoughts and analysis. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. I will see you guys tomorrow. Thank you.